Welcome back. Nearing the lowest point of the day again now is the Nifty 25,048, and it's just 5 to 6 points away from that intraday low of 25,041 that the index had made. So almost there. 100-point cut again on the index, and the recovery that we saw in the early part of the session has been very swiftly sold into. Christy Mathai is joining in to take the market conversation forward. Christy, good morning. Thank you for joining in. You know, we've started off with the earnings season. A couple of IT earnings have been disappointing, to say the least. We have more IT results coming up as the week goes by, but do you expect any potential on-ground recovery, if not in the first half, at least in the second half of FY26 for these IT companies? And if so, how do you position yourself in a sector like this?
Yeah, thanks for having me. Good morning. So clearly, if you were to just go by the last couple of quarter results, things are not improving as people would have expected. There was earlier this year, there was a expectation of recovery, but that has not come through, thanks to what you have seen in the US and other geographies owing to, the Trump tariffs and so on and so forth, which is creating some bit of, uncertainty in the minds of the IT spenders, which is the large Fortune 500 companies as you see it. So, it is very difficult to call out when could be the recovery, because you see most of the IT companies themselves, faltering on that sort of analysis. But perhaps next year, what we can see is, it's been almost since, the COVID, boom that we have seen in IT spending has been almost about 2 years where the IT services spend has been pretty subdued. And if you were to really look at the fundamental factors, the on-site offshore proposition that, many of the Indian IT services enjoy, has that gone away? Clearly, the answer is no. Execution at scale, that also remains pretty relevant. Even now, we have seen fairly large deals, high ticket size deal signings also happening, in the past few quarters. So some of these propositions still remain very relevant. And at some point in time, that discretionary spend has to come up, and we wouldn't be able to pencil in whether it'll happen in the next 2 quarters or perhaps in the first half of next year. So we are pretty patient on this pocket because, if you were to look at the overall scheme of things, IT still looks, from most parameters, pretty reasonably valued in this environment.
So are you overweight or neutral on IT right now, and the distinction between large caps and mid caps?
Yeah, so our allocation versus the indices is on the higher side, compared to whichever index that you look at. And mostly it would be in the large cap pockets that we would be deployed owing to liquidity considerations.
Do you think ER&D has bottomed out? The likes of a Tata Elxsi, Tata Tech, LTTS, where we've seen the biggest valuation derating?
Right. So, see, some of these companies carry risk owing to concentration in specific sectors, be it auto, be it some other sectors. So when those sectors are going through some issues, as you would see it, if you are overtly exposed to that, you will see those companies suffering. And that we think is happening because they sort of have enjoyed the last 2-3 years of fairly good growth in the auto growth owing to EV shift or some other sectors. So broadly, if you're overexposed to certain themes, when that sector is going through a turmoil, you will have issues. So from our perspective, we still think these sectors, there is some downside left in that whole ER&D pack, and the valuation do not really capture that risk.
Okay. Christy, you want to tell us what is the portfolio positioning? So on IT, you're slightly overweight. Where else are you overweight and even your underweight positioning right now?
Right. So we are pretty positive on the financials pack. Clearly on the private sector banks, that remains a fairly large holdings. In the past few years, what you have seen, they've not really participated in the market rally. But broadly now, with the environment becoming more conducive, owing to some of the RBI intervention, things are looking up. The credit growth, the deposit growth still is pretty stagnant, but we are hopeful towards the H2 there should be some recovery. That remains a large pocket. And also we are exposed to some of the saving themes. We have allocated large chunks in insurance, both general and life, and some of the capital markets play as well, though we are very careful on an exposure there. Apart from that, auto consumer discretionary, which is primarily the autos, also remains a fairly large overweight from that vantage point, because we expect volume recovery going to come through the next year. Places where we are clearly underweight on consumer staples. We have had no exposure for a fairly long time. And we think, the growth that it can potentially deliver against the valuation are not clearly stacked up in an investor's favor. So we are watchful on that. We like those companies, but we are watchful on that pocket.
Christy, we'll have to leave the conversation here for now. Thank you very much for joining in. That's Quantum AMC. We'll get into a break, but don't go anywhere, because on the other side is the big interview for the day. The management of VIP Industries will join in to talk about the promoter stake sale. Stay tuned.